Markets lately have been what I call a bipolar, meaning today they are up, 500 points, and tomorrow they are down 600 points based on the exact same news. Why? Because this news is very fluid. Right now, bunch of the markets, bunch of investors, all right, are really, really, really putting a lot of focus into what is happening in Russia and Ukraine. Why? Because it has the ability and the capacity, of actually weighing a lot on the markets and what we call the global economic growth. All right, because today markets are really a global village. All right, so I'm going to share with you in this video what you should do in this current environment to continue to safely invest without worrying too much about what is happening in Russia and Ukraine, given what is happening, and also looking at what the market did in the past and where the market is going so far after we kind of look at the major drivers and the major parameters here. So first one, look at what the market is doing today. Well, 1.26% down on the Dow Jones, the S&P down 1.12, Nasdaq not as much, which by the a future session yesterday and pre-market this morning, it was down 3%. So it kind of gained gained a lot. It was green at some point, at some point, but it reversed and recovered a little bit. So what is actually happening? Well, as I mentioned, everybody is putting a lot of focus into what is happening here. The stock market in Russia is going bananas. All right, it's lost almost 50% now. Russian banks are losing 77% today only. It is very difficult for people out there to actually withdraw money, and as a result, the central bank is putting a lot of new measures to actually counteract the sanctions. They're buying a bunch of gold and they hike interest rate to 20%. Can you imagine that? 20%. That is a lot. All right. But since President Putin raised the whole nuclear alert, nobody wants to have a nuclear bomb going off. Why? Because people are going to die. But besides people dying, you actually have the ability or the capacity for the economies around the world to actually start growing. And this is a major, major, major problem for investors, because you want to make your money grow. And your money grows when the economy grows and companies continue to make a lot of money. That's why stocks continue to grow. But is that not the case, then people are going to panic. They're going to panic and they're going to, kind of pull the money from the market. And that is, believe what we're seeing today. But because this information is kind of fluid, today the market will be up on maybe Russia talking with Ukraine or China weighing in the whole conflict. And tomorrow they will be down on the news like, this whole nuclear alert. So what you should do and understand is, as an investor, keep in mind that the market tends to overreact. All right, tend to overreact because they're willing to always anticipate and price in future events now. Because by the time we get to two weeks and the news is actually reality, it's kind of too late, because people anticipate quick and fast. So last Friday we had a very, very, very good day for the markets, because we had, a major news. And this morning over the weekend, we had another bad news, and people already started, reacting a lot. So you need to keep in mind that when you look at the VIX, the VIX is really the volatility index or the fear index. Whenever this is above 28, it means it's pretty much time to buy. Why? Because people are or might be selling based on an overreaction. All right. Now, another thing to take into consideration is the fact that now that Russia is talking with Ukraine as we speak, out of it may come a potential solution, right? Maybe they don't invade the whole country. Maybe they only take two regions, that were declared independent by Russia. But the bottom line is, because there are so much sanctions on Russia economy now, it is pretty much difficult for any Russian businessman and consumer to actually do something with money. Either invest it, either withdraw it, either use it. Why? Because Federal Reserve said we're not going to start do business with Russian central bank. All right. Based on, on top of that, you have the billionaires, the oligarchs, the Russian billionaires losing a ton of money, losing a significant amount of money, and because of that, it's not good for them. So they're actually starting to put a little pressure onto this man, Vladimir Putin, the president, to stop violence because it is not solving the problem and it's not good for anybody. And on top of that, you have casualties. So people are losing their life over something really, really dumb. So what you should continue to do as an investor is to look long term, because long term, the market definitely is going to be higher. If you want to continue to invest on a monthly basis or do what we call dollar cost average, well, do it, because these dips are definitely a good thing for a long-term investor, right? And long-term shouldn't necessarily be 10 years from now, 5 years from now. It may be, till the next half of 2022, when things with the Federal Reserve, things get a little bit, better, all right? Now, on top of it, you also want to look at, well, if I'm willing to trade or to day trade, or if I'm willing to surf on a specific trend, something that may be positive in this whole thing, you might better look at energy or oil. Why? Because energy and oil so far have been doing good. Look, all the small mid caps on oil so far and energy have been up significantly. Why? Because the energy sector is gaining on news that if Russia is getting a lot of sanctions, well, it's going to be a lot more tougher for them to continue to produce oil. Meaning, if I'm buying these stocks now, I can continue to make my money grow while, this whole conflict thing from a political standpoint gets settled a little bit, So if you want to look for a place to trade or maybe to park your money for just, maybe the next few months or the next few weeks, then definitely I will be looking into the energy sector. This is another ETF to give you an idea on how the sector is, behaving today compared to the whole market. Now, finally, I would advise, if you want to follow the news and trade, sell the news or buy the rumor, is going to be a lot more difficult. Why? Because, as I mentioned, the news and the information is really fluid. It just takes a second or a minute or even overnight for the sentiment to shift based on the news that would drive the markets upper, or on a downtrend. So if you don't want to take those risks, I would just say stay on the sideline. Keep your money, just your cash. If you have some cash, keep your cash on hand for now and wait for better opportunities, or at least for a trend to confirm itself. Because even if markets are down today, if they continue to go down tomorrow and until the end of the week, then it will give you a sentiment that, hey, we are on a downtrend. So the longer I wait to see this, the better. But on the other side, if it continues to grow, it will give you a confirmation that we are getting out of the weeds for now, and then maybe it's time to put my money to work again. But it never fails to actually have some cash on hand, because cash is king, definitely in this current environment. That'll be it for this video, folks. I'll see you in the next one. Take care.